Now, with a focus on risk to prices and liquidity, let's get some more analysis from Annabelle Huang, who's managing partner of Amber Group. Annabelle, thanks for joining us again. I want to ask you about how crypto is performing, in particular for developed market investors, compared to, say, other ones elsewhere in the world, and how what's happening in these markets is really impacting how crypto is being used.
I do think investors in different regions' approach is slightly different. I think in the US, just because they already have access to very quick and easy dollar funding, dollar banking, that they think of Bitcoin or Ethereum or crypto more as investment vehicle. Some of them use Bitcoin as sort of a gold equivalent, and I think that narrative continues to play out, even though it's more recently traded more as a risk asset. But I think in other parts of the world, so Southeast Asia, Latin America, even some parts of Eastern Europe, especially I think with dollar being very strong, and a lot of the emerging market currencies, even the G10s like yen, devaluing a lot against dollar. So I think they're also looking for another way of holding other than just fiat.
Yeah, Annabelle, in your opinion, is Bitcoin behaving as a hedge against inflation right now for investors in different parts of the world? Does the fact that it's seemingly mirroring risk assets mean that it can't still be an inflation hedge?
I don't think so. I don't think it's mutually exclusive, but if we look at different time horizons, it'll look slightly different. I think over the long run, Bitcoin still behaves more as a deflationary asset. But in times of volatility, especially in times of liquidity crisis, and right now we're in interesting cycle where the macro cycle coincides with the crypto cycle. So I think right now you're seeing a bit more correlation between crypto and risk assets. But even over the last week, we saw a sort of a mini rally in Ethereum, and that's driven not by any macro events, but more sort of on-chain dynamics where people are seeing a clear timeline towards merge. So I think that also speaks to a more isolated economics at some point.
So how then are investors, Annabelle, in Asian and emerging markets in particular, playing this bear market?
I think for a lot of investors, it's their first time seeing a cycle like this. I'm sure it's a bit scary and overwhelming, especially when they got in the height of it, right? Being involved in the play to earn games and all that, we've seen the momentum die down there. But I think it's important to have a longer term view. A year or 2 years when we come out of this, what is actually the use case or the mass adoption coming from, and I think for average investors, I think they tend to get hurt because they always sort of FOMO chase on the high and then sell early on the way down. So if you do believe in crypto as an asset class or as real use cases down the line, then you can just put it away for a year or two if you can afford to do it, and never take on positions more than you can stomach.
All right, Annabelle, thanks for that. As always, that was Annabelle Huang from Amber Group.